You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 24th day of June, 2022. Everybody's been working for the weekend, and here it is. Comes quick on a 40 work week, so. Anyway, welcome to the show. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. It is a historic day. The official announcement came out just hours ago. Roe v. Wade has been overturned as unconstitutional. Now, I'm not going to go into that right now. I'm going to offer a little disclaimer. If the discussion of Roe v. Wade disturbs you, upsets you, could serve as some kind of a trigger, affect you emotionally in a negative way, then you can stop listening at that point, because we archive the show, and then at some point later on you can fast forward through anything that you would find disturbing. Now, I know that the majority of our audience is dancing in the streets. My concern is what's going to happen tonight when there's a devil dancing in the streets. But anyway, enough of that. Thanks for joining us. We have 2 live broadcasts every single day. The first live broadcast is our live training room from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is reserved for members only and those who are taking our 1-week free trial. At 11:30 a.m. Eastern, the live training room ends. We take a 30-minute break. Then we come back for the afternoon broadcast, which is a little bit different. It's open to everybody, the public, the whole wide world. Okay? Now, there's 2 ways you can join the afternoon broadcast. The afternoon broadcast is also different in that we're not actively putting on taking off trades as we are in the live training room. We're actually recapping what happened in the live training room, and we're recapping what has happened over the course of the week with the Logic 247 alerts and the concierge trade alerts. We of course go over some headlines. Now, there's 2 ways to join the afternoon broadcast. The best way is to go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. That will give you 1-click access to the show each and every day. How does that work? Simple. Once you've completed the 30-second registration, going forward every trading day, you'll get an email right before this broadcast starts. In that email, there will be a link. And when you're ready to join the broadcast, all you have to do is click that link, and it automatically logs you right in. Of course, there'll be days when you're out of the office, away from your desktop, but you still want to join the show live. All you need is an internet connected device. It could be a phone, it could be a tablet. Point the browser to youtube.com/CFRN. Easy to remember. Now, not only do we broadcast live on our YouTube channel each and every day, we also archive every daily broadcast. Currently, there's over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So let's open with a word of prayer, as we do. Now, we all need freedom from time to time from fear and worry. Our scripture, Hebrews 2:14 and 15, has this to say: Since the children have flesh and blood, he too shared in their humanity, so that by his death he might break the power of him who holds the power of death, that is, the devil, and free those who all their lives were held in slavery by their fear of death. You can have money in the bank, gas in the tank, food in the fridge, but the fear of death still hangs over you, prince or pauper. It can, but it doesn't have to. Now, I claim to trust God, but at random moments, fear grips my mind. Maybe my wife goes to the store and I know it's 10 minutes there. She shops for 10 minutes and it's a 10-minute drive home. And an hour's gone by, she's not back. Am I thinking maybe she decided to take a stroll in the park or, go have lunch with a friend? No. My mind immediately goes to the worst possible thing. There's been an accident. The car won't start. She locked her phone and her keys in the car. I don't know if that happens to you, but it's typically how the human mind works. We imagine the worst possible scenario without dwelling on any possible positive scenario. Maybe your child has a headache, so you start Googling about brain tumors. Your boss calls you into a meeting and you envision yourself standing in the unemployment line. All he wanted was that file you promised him yesterday. Fear can be irrational, yet sometimes bad things actually do happen, which is why we experience fearful thoughts in the first place. Hard circumstances may come our way in this world, but God's children don't have to fear them beforehand, because we can trust our Heavenly Father will show us His faithfulness in all situations. Jesus shared our humanity, yet He never worried because He knew His Father was in control. Imagine growing up knowing that your destiny is the cross. Even when Jesus faced death, He turned His thoughts to His Father and prayed. Jesus died to break the power of Satan over you and I. And by His resurrection, He defeated death, setting us free from slavery to fear of death. Think about it. Isn't death the worst thing we fear? When someone gets cancer or has a car accident, we immediately fear they will die. Yet Jesus conquered death when He rose from the grave. And His promise of eternal life to all who believe in Him means we need not fear death. In a strange turnaround, for those who place their faith in Jesus, death becomes not our worst day, but our best, because it is the doorway to beautiful, forever life with Jesus. If we don't have to fear death, maybe we don't have to fear smaller things either. If Jesus has power over death, he also has control over the financial problem that keeps us up at night. He already knows the end of the story. And according to his word, he works all things for our good. So, what's worrying you today? How about turning your attention to Jesus, the Savior who is able to deliver you from every trial? What if you surrender your fears to him and consider them in the light of biblical truth? One day, your death and mine will be the entrance into eternal abundant life. And the problem you face now is simply a doorway to see more of God's power and experience a closer relationship with him. Let's draw near to Jesus. Pray with me. Heavenly Father, I praise you today because you have won the victory over sin and death. I praise you for the power of the resurrection, which demonstrates your power over all things. God, thank you for the gift of everlasting life. No matter what happens today, I need not fear because I have the hope of eternity with you. Jesus, forgive me for doubting at times instead of trusting. Thank you for having mercy and compassion on my weakness. Lord, I surrender the situations that worry me into your loving hands. I ask that you put my fears to rest as I see them in the light of my Heavenly Father's great power and love. Help me fully believe you are working out your good purposes in my life. You have the last say over my circumstances today. I pray that you give me the grace I need to rest in your arms and trust your care over me, my loved ones, everyone in this audience right now, and those who will listen to this broadcast later. In Jesus' name we pray. Amen.
Amen.
Okay, everybody said amen. How's the back?
It's better today. It's better. Much better than it was yesterday.
The back is back.
Yes.
All right, guys, let me give you the numbers here from around the world. These are the cash markets, or the indices, as they're called here in the U.S. The Dow is currently up 652 points. It's a little over 2%. NASDAQ is up 266 points, which is almost 2.5%. S&P 500 is up 91 points, 2.5%. Russell 2000 is up 43 points, 2.5%. Now, it's an awesome day. When we get into the charts a little later in the show, and we go to the daily chart, we'll see where we are and why we've got some potential resistance overhead that we really need to clear in order for the market to continue to move higher. In the commodity basket, crude oil is up $3.22, trading at 107.49 last. That's a gain of over 3%. Gold is down 50 cents, trading 18.29.30 last. Silver is up 11 cents, trading 21.16 last. In the Asian markets at the close, the Nikkei posted a gain of 320 points, 1.25%. The Shanghai rose 29 points, and for the Shanghai, that's almost 1%. The Hang Seng rose 445 points, which is a little over 2%. And in the European markets, at the close, FTSE up 188 points, over 2.5%. The DAX up 205 points, 1.5%. The CAC up 190 points. That's huge for the CAC. It's a gain of 3.25%. And so, it was a green day in Asia. It was a green day in the UK. And it's a big green Radio Friday here in the US of A. With that, we'll go to Michael, get a recap of everything that happened this morning in the live training room. President Biden is going to address the nation this afternoon regarding the Supreme Court overturning Roe v. Wade. Again, for any of you that's a sensitive topic and subject, as we get into that later, as we read the news and discuss it, if you choose to hit pause, or you don't want anyone to feel hurt. Most of our audience probably very happy over this decision, but I know that there's some out there who may not be. So, just giving you that heads up. All right, Michael, you got...
All right, I believe I got the charts.
You got the charts. I can see everything. I'm going to hit mute, and it's all yours.
All right, here we go. Good afternoon, everyone. Happy Friday. Today is the 24th day of June, 2022. If you've not taken a free trial with us and you want to take a free trial with us, go here to eminitrainingschool.com. Right here, if you scroll down right here, all we ask for is your first name, your email, and your phone number. You can tell us because training challenge, so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the free trial, so make sure you click on the link. Right? Recaps. Now we'll get into this and I'll show you everything that we did. Look, $1,000 even today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 24th day of June, 2022. Today we made 31 ticks in crude, 4 in gold, and 52 on the ES. That put us up $1,000 a contract on the morning session. Today it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $200 a contract, and we took a total of 14 trades this morning. I spent a lot of time teaching this morning, so it was, yesterday I was only in there for an hour, and today I taught for an hour, so it was a good morning anyway. Anyway, on the month now we're at $18,695. That's over 17 trading days, averaging $1,099 per contract per 2-hour trading day. We've gone 181 business days since our last negative day, and we've gotten our goal for the day on 120 out of 120 opportunities so far this year. Okay. Just look at, okay, I didn't see anything there. All right. So on the year now, with $130,793. So over 120 days, averaging $1,089 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day and you were to add 1 contract per month, and your goal was $100 a contract, so far you would have only worked 17.46 hours this year, and you would have averaged $3,306 an hour on the year. Okay, for those 17.46 hours. All right, let's get into it. Now, I'll start with this, Laura. I'll start with this. I know you came just to watch this. All right, so I went in great detail last night about how to set this up in the partners meeting. So any of you guys that are partners, you want to see how to set this up, I'll do it quickly right now, but go watch last night's partners meeting. I went to great detail about it. Okay, that is out where you can see it in Telegram. Basically, all you're looking for is for the bar to be the right color, the BBC to be the right color, and you can see the lines in the ribbon. If you can see the lines in the ribbon, and the BBC is the right color and the bar is the right color, you want to take that trade. Right here is a blue bounce off a blue BBC, and you can see all 3 lines in the ribbon. You go long. Let's find a short. Right here is a red bounce off a red BBC, and you can see all 3 lines in the ribbon. you take that short. Okay, when it starts to get crunched up like this, where you can't see all three lines, don't trade. All right, that keeps you out of the chop. All right, right here, blue bounce off a blue bar on the BBC and blue bar off a blue BBC. You can see all three lines in the ribbon. You don't need the slingshot for this. Okay, you don't need the slingshot. You just look in here, there to there. Okay, you want to take that trade. Right here, it was questionable because you can just barely see the white line in there. I mean, it worked out okay, but so what's the deal with the risk, I think? What's the deal with the risk? Well, you see every bar that's hit the BBC, you don't see anything after it going beyond the bar. Okay, so usually just a couple of ticks beyond this. Now note that this is a 7-tick range. It's not a 4-tick range. Okay, and I put this thing on here because this is a 7-tick range. With a 4-tick range, it's easy for me to look at things and establish, you know, where things got to go. I can just say it out loud, do it all the math in my head, and I've been doing it for over a decade, so that's easy. But I switched to a 7-tick range. It's not as easy. Those numbers for me yet aren't that easy. I mean, one thing that does make it easy is these are range bars still. So if I know where the high of the bar is and I'm looking to go on a down close, like let's say when this bar hit the BBC right here and we had the high put in on this bar, you can say, okay, well, the high on this bar, this is gold. I said the high on this bar is 1831.7. So the low where I want to enter is going to be 8 ticks away from that. 1831.1 is where I want to enter this. Right? I'm sorry, 18. It's going to be the high of this bar is, I'm sorry, the high of this bar is here. It's 1831.7. Okay, so 1830.9, 8 ticks away from that. 1830.9 is where I want to have my order waiting for the down close on this. 1830.9, and that would have been right here. Right? If the high is at 30.7, I know the low is going to be right here at 31.0. 30.9, the next tick down is where I want to have my order waiting. All right, and that would end you in right there, 30.9, and it dropped all the way down here to 28.2. All right, over here, the low of this bar was 29.5. So I know the high of this bar is going to be 7 ticks higher than that. My order wants to be 8 ticks higher than that. Okay, so you see the high right over here? The low of the bar is 29.5. The high is going to be 7 ticks higher at 30.2. I want to have my buy stop at 30.3, 8 ticks higher than the low. All right. Over here, this one, the high of the bar on this one is 28.9. I know the low is going to be at 28.2. I want to have my sell stop at 28.1. Okay. It's as simple as that. Right here, this one. Right, the low of the bar is at 26.4. I know the high is going to be 7 ticks higher, 27.1. My buy stop, 27.2. It's 8 ticks higher than the low. Okay. Now that is if you get all the colors right. If the colors are wrong and you want to, you don't have to do this. If you just wait for those trades, they're going to happen. You'll get them. I think it's going to reduce the number of trades dramatically. I mean, you can see here on gold, that gives us 1, 2, 3 trades, 4 trades this morning. Okay. If you want to do these other trades, you can still use the slingshot. You can still draw the trend lines. You can still do all that stuff. This is still a bounce off the BBC. The BBC is the red and blue line here now. It's not green. It's red and blue. It's still the BBC. It's just to take the simple, high probability, super high probability bounce off the BBC. You just got to have the colors right, the BBC right, and you got to be able to see all the lines in the ribbon. All right. If you want to do the other trades, use the trend line, use the slingshot, all the stuff you already know how to do, just do it. This is not new. It's just being displayed to you in a much easier way for you to take action. Okay, so that was gold. I'll just go through all the 7-tick ranges. Like that was gold. This is crude oil. We'll go back to the beginning. Crude had a bunch of movement in here. So right here at the beginning, this was the first one from the open. I think that was even before the open. It hit the BBC right there, it hit the BBC. Remember, these are 7-tick range bars. So from here to here is significant. It's not like the 4-tick range bars. Now right here, this is 105.98, and it didn't slow down until it got all the way down here to 73. That's $250 a contract. Okay. And then if you drew your trend lines and you looked at the slingshot, you'd be able to enter again there and again there and again here. So it spun around and it didn't give you anything on the long side. Spun around again, didn't give you anything right here on the short side. You could have taken a short right here. That would have been kind of risky because it was kind of crunched up still. The next spot was actually right here. Again, you got to move your stop to break even after you get what? 4 ticks in profit in the trade. You don't have an MA1 in the picture anymore, so you don't have that. But right here, the entry would have been 39. It dropped down to 35. There's 4 ticks in profit. You bump your stop. If you had put your stop a few ticks beyond the bar, your stop would have been up here. So you would have stayed in the whole thing all the way to down here. It would have sucked right here, though. It would have been drawn down 8 or 9 ticks. But you know, up here it would have gone 39 down to 32. So you ended up with 7 ticks out of that. Not a great move, but still a move. All right. Right in here, you can see all the bars, but the BBC changed color. So you're not going to do that one. Over here, you can see everything. You got a short right in there. You had it right here too, the same trade. If you took it, that dropped about 20 ticks, 15, 20 ticks. In here, you didn't have one here because the lines weren't all there. And in here, you just have the trend line trades that you could have done. Spun around, didn't give you anything all the way through here. I guess right here, you could have taken this. This again may have stopped you out depending on how far down you put your stop. I don't know. I probably wouldn't have done it because it was starting to crunch up right there. You did have some trend line trades that you could have done in here on this move up. And there was some news that came out, I think, that triggered all that. Once it stopped and it came over here, you had in here a couple of trades you could have done right here. Okay, it spun around, didn't give you anything good. Spun around again, gave you a short right here you could have taken. Spun around again, gave you a long right there you could have taken. Nothing really through here you wanted to do until you get really, I mean, it was going back and forth being crunched up all through here. So I wouldn't have wanted to touch anything until over here. A couple of shorts right in there. A long right here. This one would have stopped you out. Then we get into kind of where we are now, I think. A nice short right here. You could have taken that. Again, keep in mind, you only need to do this once or twice a day. Okay. That was crude oil. Now we'll do it again over here on the ES, the same stuff. Let's scroll this all the way back here. Okay, so in here, you're looking for, here it is right here, the very first one. That was a little before the open. It was right at the open. It was blue on blue right there. All right. There was red on red right here. It started to get crunched up a little bit. You can't really see it all that well. Right in here, you know, the lines started to get crunched up in there. You can't see any space between the red and the yellow right there, between the BBC and the yellow. So then it started moving up and you really didn't get anything. This kind of okay right here, the blue and yellow, there's just a little space in between. You could have taken that right in there. See in here, it's all crunched up. I wouldn't have done anything in there. Still kind of crunched up in there. So if you're just looking for that simple trade, there weren't that many right through here. Here was one right here. You can see everything clearly. That one didn't actually hit the BBC. This one did. You could have taken that. You can see everything clearly, space in between them all. This one right here, this short, that was nice. Right in here, another long right there. See, right in here, it gets a little messy. Everything was crunched up. Right here, though, this one right here, you can see all the lines pretty clearly right there. Space in between them. See, that's the thing, Laura, right there. All right, now let's get into what I did do and didn't do today. All right, on the gold, we didn't have that many trades on gold, just a couple of them. All right, so gold had some pretty good movement here in the pre-market. And our first trade was right in here, I believe. We picked up 4 ticks on that trade. Had a break even on that one, a break even on that one. There were more trades that triggered. This was my moment in time. I thought it was going to go down and then go up. And then I didn't have the eventually go all the way down here. I thought it was going to go down to here and then go up some and continue going up. It took it a while before it did continue going up, but it gave some more trades here. Now, I was talking all during this, all the way to here, pretty much. And then during the break, highest probability trades, there were none. Okay, so we had just a few trades on gold, and we ended up with plus 4 ticks on gold. Crude oil. Let's see. On crude. Frederick, I sent you the link. You should have the link for that meeting that we're going to have here in 15 minutes. Okay, on crude, we started out with a break-even trade here. It was a really long break-even trade. This looks kind of like the moment in time, but it wasn't. This looks like a short that I took that I got a break-even on, then another short that I took that I got a break-even on. Right, I actually had some profit in both of those, but I didn't take any. This was the highest probability short off the BBC. See the red bar off the red BBC? Highest probability short. Okay, so you get back in here. We had a short right here. It was crude oil, right? Our first trade on crude that we actually made money on. We picked up 16 ticks on the first one. And then, I'm sorry, that was the ES. We picked up 12 ticks on crude on the first one. And then 14 ticks on the second one to get us to 26. And then the third one, 1 tick to get us to 27. And then this was during the moment in time. Laura, have you experienced a moment in time with me? I don't know if you have. You haven't been in the room in a while. But right here, I didn't know what it was going to do. I thought ultimately it was just going to go up to this level anyway, but it wasn't really giving me anything to work with during my moment in time. I think it's going to go up is what I said, and I drew the arrow. So it did go up, and it moved around a lot during the moment in time, okay, because I was talking a while in there. And it really did move around a lot and give a lot of opportunity. There was a lot of chop in there too, but I don't think I stopped talking until somewhere over here. I had a lot to say today. Oh, there were people asking questions, so that's what spurs those moments. Anyway, our last trade right here was 4 ticks in profit, went from 27 to 31 on crude. Okay, we had one more break-even trade right in there, and during the break, just the highest probability trades. The highest probability trades, Laura, are when you have the right color bar hitting the right color BBC. All right. So I don't see any of them here during the break yet. This right here was the highest probability trade. The slingshot's got to be right too. This was the highest probability trade. You had a red bar hit the BBC, give you a down close. This was the highest probability long trade. Blue bar hit the BBC, up close. And that was it for the highest probability trades. Not right now, Bart. Not right now. The question was, am I still doing options? I mean, I'm still doing them. Just you got to have the right situation, and I just don't have time to focus on it right now. The right situation, I'm sure, is out there in some capacity, but I don't have time to focus on it right now. One of the things that was asked of me earlier this morning was what I think is going to happen the rest of the day. My thought was we're going to end up back down here by the end of the day. That's my thought is. I don't know how long it's going to take to get there. I said I thought it was going to go a little bit further, a little bit higher today. That's what I projected this number on, was going a little bit higher today. But we'll see what happens. Okay, so going back to the beginning here on the ES. Our first trade on the ES was right here. This was a bounce off the BBC. The bar was not blue. It was white because the MA1 was the wrong color. This was great separation down here. The slingshot was good. We took this. We picked up 16 ticks on that first trade. All right. The next trade after that, we picked up 2 here to get to 18. Then we had a break even. Then we went from 18 to 32. So that is 14 ticks on this trade. Okay. And then I think I was doing a lot of talking and not a lot of trading all through here. 10 o'clock came in. There was news that came out at 10 that moved the market all around, but it didn't give us any good trade setups. All right, then we did the moment in time, and during this moment in time, I had projected where I thought the market was going to go. Because, the moment in time, for those of you guys who don't know, moment in time is I shut everything off. So this is all that we had at that time. This is all the information that we had. The charts were stopped right there. So this is what the slingshot looked like. So what I do is tell you what I see here, what I see on the chart, what I see in the DOM, and my projection of what I think it's going to do. So I drew this is what I think the next larger time frame move is going to show. That's what I thought. It was going to go up that far. Okay, right here. This was what we could see already that it had already done. It had already triggered this, went down, didn't put in a lower swing, came back up, tested the BBC. It was going down again. I wasn't going to do another trade in here because this was not down at the bottom. All right. It was pretty close, but not there. To me, it was suggesting that it was going to go up from here. But I thought, given what was in the DOM, that it was going to go down to this level. You can see the line that I drew right there, the horizontal line. I thought it was going to go down to that level. So I drew that arrow and I said, I think it's going to go down to there, and then it's going to go up off of that. And, well, it didn't go down to there. It just went up off of that. And I didn't expect it was going to go straight up here, but I thought it was going to go up to this level. And it took it a while to actually go up there. You know, it went all the way up to here, and then it pulled back. It got within like a point of that over time. But again, I was talking during all this stuff right here this morning. And then I started trading again. And so at that point on the ES, I believe we're at 32 ticks. All right. Then this next one right here, we picked up 8 to get us to 40, and then 6 more to get us to 46, and then 6 more to get us to 52. And that was already in the trading for the morning session. During the break, just the highest probability trades, and not seeing much of any. Right here was a blue bounce off the BBC, bullish separation. Didn't really have a good step number 3, and the slingshot's not set up for that. So that was pretty much it. So, Laura, what you're looking for, the highest probability trade. Let me just show you something that's the highest probability trade that's not all crunched up. Like this. You have a bounce off the BBC with the right color bar. Okay, it's a bounce off the BBC with the right color bar. That means the MA1 is the right color and the cycle is the right color, and you have the right separation. That's your highest probability trade. All right, bounce off the BBC and the slingshot's right. Right color bar and the slingshot's right. Your highest probability trade. Right, we're not showing too many short ones here in this time span, but that's what you're looking for. Your second highest probability trade. See, here's the highest probability short right in here. Your second highest probability trade is going to be when the bars are all the right color. And let me find one that doesn't get disqualified. Okay, your second highest probability trade is going to be when the bars are all the right color, the slingshot's right, and you have the trend line trade. Okay, the second highest probability trade is going to be when everything is the right color and you have the trend line trade. Okay. That's because what that's telling you, here's the highest probability short right here. That would have been messy, but it did eventually work out. What that's telling you is that the MA1 and the cycle are the same color. If you have the right kind of separation in the slingshot, all that's good. That's going to be your highest probability trades. Okay. Now, I did all that to make the sidebar. Now, I think you've seen the sidebar before. But then I did all this to keep you out of chop and make it really easy for you to see where you should trade. Like right here, while they've been talking, right here was a short you could have taken right here. All right, and while they've been talking, this was on the ES. Again, these are 7-tick bars. So this is a big move from here. It's 87 all the way down to, let's say 84. So you got a 3-point move right there that you could have gotten while I was talking. Okay. All right, crap, it's 12:40. I just got to notice I got that other meeting coming up in 5 minutes. All right, so that's everything. That's everything that I did this morning. Now let me jump back over here to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 24th day of June, 2022. We made 31 ticks in crude, 4 ticks in gold, and 52 ticks on the ES. Put us up $1,000 on the morning session. Today it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $200 a contract. We took a total of 14 trades. So on the month now, we're at $18,695. That's over 17 trading days, averaging $1,099 a day. We've gone 181 days since our last negative day, and we've gotten our goal for the day on 120 out of 120 possible days so far this year. Puts us at $130,793, averaging $1,089 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day and you were to add 1 contract per month and your goal was $100 per contract, you would only have to work 17.4 hours so far this year, and you would have averaged $3,306 per hour. Okay. You can do all of that, Laura. Go out to the indicator store and download the latest thing. I don't have this on NinjaTrader yet. Okay. But if you go out to indicator store and you download the latest thing that's in the indicator store, then you'll have everything for GT Pro. We have it on TradingView as well. If you look at TradingView, okay, we have it on TradingView as well. Okay.
Yeah, I asked her to reach out to me in Telegram. I can't find her there, and then I'll direct her.
Okay, she's in Ninja. That's what I thought. She was in Ninja.
Oh,
so Ada's in Ninja, and a bunch of Ray's crews in Ninja.
Okay,
Some of our
we'll
GT Pro also.
Okay.
Yeah, I'll get it on NinjaTrader before too long. Okay, but you do have access to TradingView, and I do have it on TradingView. Okay. All right. So if you've not taken a trial, go here to eminitrainingschool.com. Scroll down to right here where it says first name, last name, email. Give us that information, phone number, tells you it's a challenge. Hit the send button. Make sure you hit the confirmation link once you hit that, and then we'll know you took the trial. Okay. Right now, I can pass it back out to fabulous Phoenix, Arizona, in Studio Way, overlooking South Mountain, America's largest city park. Right. Dwayne, if you are ready.
Yep. I'm ready.
And if anybody has any questions for me, you all have my phone number. If you don't have my phone number, you can text me at my phone number, or you can email support at any of our websites, support at cfrn.net, support at eminitrainingschool.com, support at mytradingiq.com. Email any of those, and I should get it. Okay? That's it, guys. If I'm not meeting with you this afternoon, I hope you all have a great weekend, and I'll see you next week. Right.
All right. Recap of the recap.
2 minutes, 1 trade, $200 a contract.
Good job.
Thank you.
Good job explaining the ribbon as well.
Thank you.
And I hope you have a good weekend.
All right. You too, everyone. Hope you all have a great weekend.
Okay, guys, that's what happened this morning. First 2 hours of Wall Street, 9:30 a.m. to 11:30 a.m. That's our live training room. It's open to our members only every day, and those taking the 1-week free trial, which Michael just showed you how to do. Now, the global futures market, Globex, opens for business Sunday night at 6 p.m. Eastern. Stock traders are used to waiting until Monday morning at 9:30 a.m. Eastern to go to work. But as futures traders, we go to work Sunday night at 6 p.m. Eastern. That's when our Logic Alert channel opens for business, and it stays open around the clock until Friday afternoon at 5 p.m. Eastern. We are in week 203 of Logic 247. And as of 12 noon today, this week, we've issued a total of 72 alerts, 13 never triggered, still waiting on 7. That's 52 actionable alerts, of which 7 or 13% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, using market structure and very simple 3-step process that we teach all of our passport holders. Now, over the last 203 weeks, we've averaged 20% of actionable alerts getting stopped out. So far this week, we're at 13% today, we were at 13% yesterday, 15% the day before that. And at the beginning of the week, which is not unusual for a holiday week, we were at 27%, but as the week progressed, it's worked its way down to 13%. But again, the average over 203 weeks has been 20%. So that's where we stand for the week on Logic 247. Now for anyone that happens to be new, the actual alerts themselves look like this. These are ones we're still waiting on that just came out. Going back into yesterday, this was a short on bonds. This was a short on silver. This was a long on the euro. Short on gold. When you see the three triggers, or the three Z's, that means that one never triggered. A red X means it got stopped out. It's part of that 13%. Then we had a long on the Russell, long on the Dow, long on the S&P, short on crude oil. Now, S obviously means sell. T is initial target. The initial target on all of the markets is $100 per contract. But then, on a short, you'll have potential support, which would be target number 2, target number 3, number 4, number 5. You have 5 targets on this. And then on every alert, Logic or Concierge, the final trade to target on a short is the weekly trading zone below. On a long, it's the weekly trading zone above. Stop out on the Russell, long on the Dow, long on the ES, no trigger on the euro. We had a long on the Russell, we had a long on the Dow, long on bonds, stop out on the euro, long on silver, long on gold, a short on crude oil. Now on the longs, potential PR is potential resistance. So you got 1 target, 2 targets, 3 targets. And then on a long, the final trade to target is the weekly zone overhead. Short on the NQ, short on the Dow, a long hedge on the ES, short on the ES, no trigger on bonds. This was a long on the euro. Here's a no trigger on silver. Here's a hedge on crude. We caught crude in both directions, on the short side and on the long side. NQ, long, B as in buy. Long on the Russell, stop out on the Dow, long on the S&P, ES, short on silver, a short on gold, a short on crude oil, long on the NQ, short on the Russell, long on the Dow, long on the ES. And we had a series of no triggers where the market, that's where the market turned. And so none of these got triggered. Long on the Dow, long on the ES, long on the euro, long on crude oil, long on the Russell, long on the Dow. Here's a stop out on the ES, couple no triggers, short on bonds, another no trigger, short on silver, and I guess we're still waiting on that one, or we missed it. Stop out of the NQ, a long on the Russell. Again, you've got an initial target, second target, third target, fourth target, the final trade to target. Stop out on the Dow, and along on the ES. And that's this week, week 203. Last week, week 202, we had a total of 75 alerts, 55 actionable, of which 11% were stopped out, based on not risking more than $300 per contract per trade, less when possible, based on market structure and that simple three-step process that we teach all of our traders. You always want to risk as little as you can, and you never want to risk more than the potential profit in the trade. And you can always know what the potential profit in the trade is. Like here with the Russell, if you're getting long at 1682 and the weekly trading zones at 1752, that's the potential profit in the trade. So even if there's $1,000 of potential profit or $2,000 of potential profit, the maximum you want to risk is $300 per contract per trade. Occasionally there will be alerts where there's only $100 of potential profit or $200 of potential profit. In those cases, you don't ever want to risk more than the potential profit in the trade, because that's bad math, bad science, and it will cause you great heartache. Now, the logic alerts are based on current price action. However, even though they're based on current price action, once they're posted in the channel and you receive your alert, because your phone or your PC makes the little telegram sound, you have plenty of time to get to your computer, to study the chart, to study the alert, to understand why that is a window of opportunity and why the entry's where it's at, why the various targets are where they are, and of course where the final trade to target is. The purpose of the alerts is not just so that you can, catch a free ride and trade the alerts and make money, which of course you're encouraged to use the alerts for that very reason, but the main thing we're trying to do is to teach you how to be self-sufficient. You don't want to spend the rest of your life dependent upon some guru or whatever to tell you when to get in and when to get out. You want to learn to read the chart. You want to learn to understand how price flows so that you can enter and exit the market in a timely fashion, reaching your goal for the day. Rick asks, an open trade is canceled after how long if it's not triggered? A week? No, about 3 days. About 72 hours, Rick. Okay. Those are the logic alerts, based on current price action, but still with plenty of time to get to your computer and study it before the alert actually triggers. Our original alert service, the concierge trade alerts, they are based on historic price action. And they do not come out around the clock 24/7 as opportunity presents itself. The CTAs are published as a static report shortly after the Globex open each evening. Last night was 7:35 p.m. We had our workshop at 9 p.m. Eastern. Now, chances are you don't trade all the markets. If you want to take a screenshot, we're going to walk through each one of the individual markets to look at what happened. If you want to take a screenshot, it won't all fit in one screen, so you can snip it there, and you can snip it there. Okay. And of course, if you're a member, you have access, or if you're on the trial, you have access to the concierge trade alerts via the corresponding Telegram channel. Now, like I said, you probably don't trade all of these markets. If you're just learning to trade, you shouldn't try to trade all of these markets. You should focus in on one or two and learn from there. You're welcome, Rick. Now, once this is published, whatever markets you do trade, you should make note of where price is at this moment in time when the CTAs are published. Okay, so if you trade the ES as an example, You would make note of where price is when this report hits the channel. Then go to your 30-minute chart of the S&P, draw a line in the sand at 37.95, draw a line in the sand at 37.59. From that moment forward, if price starts trending up towards 37.95, that's bullish. And so our strategy will look for opportunities to be long the market. On the other hand, if price starts trending down towards 37.59, that's bearish. And so our strategy will look for opportunities to be short the market. In either case, that's where you're going to use Logic 247 and everything you learn in the live training room every day to yourself find opportunities to be long or short the market. In most cases, in most days, once you understand the strategy and how to read the indicators, you'll have an opportunity to get your goal for the day before price even reaches the long or short trigger. Okay? Now, everybody's had a chance to get a screenshot of that. Now, as I said, CTAs are historic price action. Logic is current price action. And when those two converge, that's where you'll find some of your highest probability, lowest risk trade opportunities. So before we go to the charts, got a couple headlines that we're going to go through. Supreme Court been real busy this week. Not just the Supreme Court, but some state Supreme Courts as well. One article I found of particular interest was written by Newsweek, which is not known to be necessarily a conservative magazine. It's been around forever. I remember when I was a kid in elementary school, I think we all had a subscription to Newsweek. And our teacher during, I don't know, whatever class it was, sociology or whatever, would walk us through and we would discuss things happening. You know, we were kids, we weren't really interested, but it was just part of the curriculum. Over the years, Newsweek has begun to lean more and more to the left, which is really why this particular article, which was written back on the 15th, today's now the 24th, Newsweek, they write, no one likes to predict riots. Even when it seems tensions are about to boil over, we would all like to hope cooler heads will prevail, and to expect that they will. Expecting the worst of our society is an uncomfortable feeling. In our recent stretch of jury verdicts following racially charged police shootings, it was tempting to wonder which results might send violent reactions pouring into the streets. Sometimes it happened, sometimes it didn't. There may have been moments of pleasant surprise and moments of deep disappointment. You just never know. But as the day approaches, when we may see the Supreme Court reverse Roe v. Wade, remember this was written back on the 15th, the author of this article says, I find it impossible to be optimistic. If angry mobs are turning up at the homes of Supreme Court justices and even making the occasional assassination attempt, what kind of nightmare awaits us when 50 years of federal abortion protections finally swirl down the drain? Will it be open season on the justices who viewed Roe as constitutional fiction? Will anger spill out into cities? In this era of inconsistent police willingness to quell these riots, will such uprisings be stopped or facilitated? There will surely be little attempt by our media culture to discourage the worst. We saw Black Lives Matter riots coddled and excused by the same voices currently painting January 6th as a day of incomparable infamy. It is bitterly cynical to say that some violence gets a free pass from those who believe the cause is just, but it also appears, unfortunately, to be true. Can you imagine the reaction from the media and the Democratic Party if a guy in a MAGA hat were found hovering with murderous intent near the home of a liberal justice? That offender would become an immediate household name, with a face peering from every news site as an example of what conservatives do. No one should identify every liberal with the deeds of the man who stalked Brett Kavanaugh or with BLM rioters. But this is why the left pays so little attention to the violent troublemakers in its midst. It simply doesn't find violence as repellent when undertaken in service of one of its own causes. President Joe Biden said nothing about the man who tried to kill a Supreme Court justice. Kamala Harris mobilized to raise money for BLM rioters. While conservatives can be condemned for an ill-phrased tweet, liberal political violence is met with a nothing to see here yawn. Senate Majority Leader Chuck Schumer warned conservative justices, "You will pay the price, and you won't know what hit you," for thwarting his agenda. Where's the call from among his own party to avoid such rhetoric in these flammable times? Earlier this month, protesters ripped off their clothes and screamed pro-abortion slogans at Pastor Joel Osteen's service in Houston. This does not rise to the level of violence, but it reveals the mindset of many on the left who give a free pass to their own worst instincts. Once Roe is overturned, and as of today it has been, the likelihood of a wave of violence will be markedly increased because of the political and media culture telling millions of Americans that they are losing a constitutional right. Now again, the author of this article says, "If I felt that the First or Second Amendment was about to be wiped from the Bill of Rights, I would be deeply disturbed. But the key difference is those rights are actually enshrined in the words of the document. Abortion rights are not. Pro-choicers are not about to lose a fundamental right. They are about to lose an argument. It happens. But for every liberal who absorbs the loss and assesses how to responsibly navigate a post-Roe America, how many will lose their minds in fits of violent unrest? I want to expect the best of my country. I want to feel strongly that reactions to the overturning of Roe will be loud and emotional, but will not explode into bloody conflict." But on the day the Kavanaugh family was spared a murderous attack, we saw President Biden speaking of a revolution if Roe fails. Of course, he was speaking metaphorically. And of course, Chuck Schumer was not giving specific instructions to would-be assassins to take out offending jurists. They will not be responsible for Roe rioting any more than Donald Trump is responsible for the January 6th Capitol breach. But in this season of public disregard for the Constitution, it's not a single mob at a single building that causes the greatest concern. It is the prospect of crowds of varying size across the nation adopting the idea that if you are a leftist and you are really angry, you may do whatever strikes you without fear of rebuke. This is a dangerous brew in the American kettle. It would be reassuring if we could expect Democratic leaders and the media to restrain their side from the worst types of reaction when Roe goes down. But we can't. All we can hope for is the relief of differences playing out in the arena of debate instead of on bloody streets. And again, this was published in Newsweek magazine back on June 15th. Today, however, as was expected because of the leaked transcript, and of course somebody needs to get to the bottom of that, the Supreme Court on Friday officially overturned Roe v. Wade, effectively ending recognition of a constitutional right to abortion and giving individual states the power to allow, limit, or ban the practice altogether. So in other words, it's being put back in the hands of the people, the voters, where it belongs. The ruling came in the court's opinion in Dobbs versus Jackson Women's Health Organization, which centered on a Mississippi law that banned abortion after 15 weeks of pregnancy. The Republican-led state of Mississippi asked the Supreme Court to strike down a lower court ruling that stopped the 15-week abortion ban from taking place. We end this opinion where we began. Abortion presents a profound moral question. The Constitution does not prohibit the citizens of each state from regulating or prohibiting abortion. Roe and Casey arrogated that authority. We now overrule those decisions and return that authority to the people and their elected representatives. That's in the court's opinion written by Justice Samuel Alito. Alito's opinion began with an exploration and criticism of Roe v. Wade, and it's holding that while states have a legitimate interest in protecting potential life, this interest was not strong enough to prohibit abortions before the time of fetal viability, understood to be at about 23 weeks into pregnancy. Now, I've said it before and I'll say it again and I'll never change my mind. Life begins at conception. The court did not explain the basis for this line, and even abortion supporters have found it hard to defend Roe's reasoning, Alito wrote. Chief Justice John Roberts agreed that the viability line never made any sense, but said he would have taken a more measured course with this case. Rather than overturn Roe v. Wade altogether, Roberts said he would have continued to recognize a right to get an abortion, and that the right should extend far enough to ensure a reasonable opportunity to choose, but need not extend any further. The court's majority took a firmer stance against Roe v. Wade, and the subsequent case, Planned Parenthood versus Casey, holding that Roe and Casey must be overruled. The Constitution makes no reference to abortion, and no such right is implicitly protected by any constitutional provision, including the one on which the defenders of Roe and Casey now chiefly rely, the Due Process Clause of the 14th Amendment, Alito wrote. The court's opinion recognized that the 14th Amendment's Due Process Clause has been found to guarantee certain rights that are not spelled out in the Constitution, but that those rights are deeply rooted in this nation's history and tradition. Abortion, the court said, does not fall within this category, and as such a right was entirely unknown in American law until the late 20th century. The opinion continued to shred the Roe decision, saying it was egregiously wrong from the start, and that its reasoning was exceptionally weak. Rather than continue the tradition established by Roe and Case, the court wrote that it's time to heed the Constitution and return the issue of abortion to the people's elected representatives. In other news, the Supreme Court's conservative majority on Thursday struck down a New York law that restricted the right to carry a concealed weapon in public for self-defense. The decision marked a significant expansion of gun rights that could topple other gun laws and result in more armed people in U.S. cities. An armed society is a polite society. Justice Clarence Thomas wrote for the majority that the Second Amendment protects an individual's right to carry a handgun for self-defense outside of the home. The New York Times reports that President Biden said the 6-3 ruling contradicts both common sense and the Constitution and should deeply trouble us all. The decision came as Congress speeds towards passing bipartisan gun legislation following last month's Texas school shooting, which left 19 children and 2 teachers dead. And I'm sure you've probably seen, whatever news channel you watch, the video where they say, well, this bill is 80 pages or 90 pages. Nobody has time to read it all. Just vote on it. We were told the same thing with Obamacare. Now, don't know about you, but Obamacare, which promised lower insurance rates, you could keep your doctor, and a number of other things. Now that was far more than 90 pages. But Congress was told, you don't need to read it, just vote on it. And they did. And my wife and I, our health insurance premium, which we're very happy with, and with our insurance provider, went from $800 a month to over $2,400 a month. And my physician quit practicing medicine because of it. In fact, he moved to Alaska to become a research scientist. The Senate voted 65 to 33 to pass the first major bipartisan legislation to address gun violence in nearly 3 decades. The House plans to vote today. They may have voted already, I don't know, a month after the Uvalde, Texas school massacre. If they vote today, they will then send the bill to President Biden for his signature. The $13 billion bipartisan Safer Communities Act seeks enhanced background checks on gun buyers ages 18 to 21 and closes the boyfriend loophole to bar gun purchases by people convicted of domestic violence against a romantic partner. And I mentioned this yesterday, and most of you in the audience, the regulars, already know it. My wife and I used to run a shelter for battered women and abused children, so this is a subject, that I know a little something about. It also encourages states to use red flag laws to seize guns from people deemed a threat to themselves or others, and provides funding for community mental health programs and school security, among other provisions. This business with the schools, every public building has to have 2 means of egress. That means a door you come in, a door you go out. And when you put an armed police officer at the entry and at the exit, problem solved. But we've got to make it more complicated, and we've got to spend $13 billion of taxpayer money. That's $13 billion we can't send to Ukraine. And while I support the Ukraine people and respect the tenacity that they've shown to stand their ground and try to save their country, we all know they're fighting a very steep uphill battle. But we've now sent over 40 billion. Some would call that throwing good money after bad, but you know what? Every human life is precious. Whether it's a life that began at conception or an innocent Ukraine citizen, or even a Ukraine soldier, or even a Russian soldier. Every life is precious. European leaders on Thursday approved formally designating Ukraine as a candidate to join the European Union, a big early step in a years-long process towards admitting the country into the 27-nation trading bloc. Ukraine has called for quick action on its application as it struggles to defend itself against a Russian invasion that has battered its military, its population, and its economy. Moldova's candidacy was also approved. The backing of EU leaders is a signal to Moscow that Ukraine and also other countries from the former Soviet Union cannot belong to the Russian spheres of influence. Ukraine's ambassador to the EU, Veselvo Chensov, told Reuters. And if you could hang on for me just 1 second, please. Okay, sorry for the interruption. The House January 6th committee heard live testimony yesterday describing then-President Donald Trump's push for the Justice Department to investigate his claim that the 2020 election was stolen. That's the election where Joe Biden got 12 million more votes than Barack Obama. 3 Trump administration Justice Department officials said they faced relentless pressure to pursue the allegations. Committee members displayed a note by Richard Donahue, the acting number 2 official of the Trump DOJ, recording what Trump told him in a December 2020 phone call. Just tell the truth. Leave the rest to Congress. Federal investigators this week searched the Virginia home of former Justice Department official Jeffrey Clark. Former President Donald Trump wanted to name Clark acting Attorney General at the end of his term because Clark was the highest-ranking DOJ official willing to agree with Trump regarding the election. The search occurred Wednesday, according to the Wall Street Journal. A lawyer for Clark, who ran DOJ's Environmental Division during the Trump administration and is now a fellow at the Center for Renewing America, did not immediately reply to the Journal's request for comment. Russ Vought, a Trump White House official who now leads the center, said the investigators took Clark's electronic devices during the pre-dawn raid. A pre-dawn raid. Sounds a little like Roger Stone and so many other shows of power that we've seen. Political theater is what it amounts to. Afghanistan's Taliban government on Thursday appealed for international aid, the nerve of them, to help it address the needs of survivors of a massive earthquake that killed at least 1,150 people and injured at least 1,600 others in a remote part of eastern Afghanistan this week. Now, I said earlier, Every life is precious. Each life created by God Himself. But the fact that the Taliban government would turn to the rest of the world for international aid, that would be like Vladimir turning to the rest of the world and saying, here, come help me finish off what I started in Ukraine. The Taliban, which has received little help or official recognition since returning to power in August after 20 years of war, also renewed calls for the Biden administration to release Afghan assets held in U.S. banks due to sanctions on the Islamist group. We gave them $80 billion in high-tech military weaponry. Isn't that enough? The shallow 5.9 magnitude earthquake leveled entire villages. You see, when you're in a country, a third world country, for those of you who may have never been to one, the standards for construction are not the same as we see here in the U.S. We learned a lot from that earthquake in San Francisco, and I think it was the late 1800s, early 1900s, the big one that basically wiped out the city, which led to us having some very continually stringent construction laws. You don't find that in third world countries. And so a 5.9 magnitude earthquake, which might not cause much harm here in the U.S., leveled entire villages, killing entire families. What a horrible tragedy. Am I saying we should not help the people that are in need? No, I'm not saying that. I'm saying I don't think we owe anything to the Taliban government, who took the country, took people, still hold some of our people, and won't release them. I guess at least they now have something to negotiate with. Representative Mo Brooks, Republican of Alabama, this week sent a letter to the House Select Committee investigating the January 6th Capitol attack, saying if certain conditions are met, he will testify before the panel. Brooks participated in the Stop the Steal rally on January 6th that took place immediately before the Capitol attack by supporters of then-President Donald Trump. Now, this is after President Trump's request for 20,000 National Guard troops to be sent in to protect the Capitol were turned down by the mayor and by good old Nancy Pelosi. And Rick makes a good point. The Saudis and Gulf nations are more than wealthy enough to bail out the Taliban. Great point, Rick. Great point. Several witnesses have told the January 6th committee that before former President Donald Trump left office, Brooks asked for a presidential pardon. Earlier this week, Brooks lost Alabama's Republican Senate primary after Trump rescinded his endorsement and switched his allegiance to Katie Britt, a first-time candidate who looks like she has a pretty good chance of winning. The Supreme Court ruled yesterday that North Carolina's Republican-controlled legislature can defend their voter ID law in court. The state's legislative leaders argue the state's Democratic Attorney General isn't doing enough to defend the law. The state law requires voters to present a photo ID. Why is this such a big deal? I mean, to drive a car, gotta have photo ID. To walk into a bar, or walk into a grocery store and buy alcohol, or even cigarettes, if you're obviously 40, 50, 60 years old. By law, you're required to show photo ID. And if you're indigent, most states will give you a state photo ID card. For how much? Free. how did this even become an issue? Well, there's so much more to it, and I think you know what it is. Anyone claiming a reasonable impediment to getting an ID also would be allowed to cast a ballot. The state's Democratic Governor Roy Cooper vetoed the bill, but the GOP-controlled legislature overrode him. Writing for the 8-1 majority, Justice Neil Gorsuch said legislative leaders who represent the people are authorized to defend duly enacted statutes against constitutional challenge. And this one really has my head spinning. This is our last headline of the day. The Food and Drug Administration on Thursday ordered Juul Labs to stop selling e-cigarettes in the United States, part of an ongoing effort to reduce nicotine-related deaths from smoking and vaping. It's the smoking part, not really the nicotine part, that kills people, but that's a story for another day. Most of Juul's sales are in the U.S., so the decision could be devastating for the company. Juul said it disagreed with the ruling and would seek a stay. We remain committed to doing all in our power to continue serving the millions of American adult smokers who have successfully used our products to transition away from combustible cigarettes. The once booming company has already stopped selling sweet and fruity flavored e-cigarettes in the U.S. market and limited its marketing after being accused of driving a youth vaping crisis. We all know smoking is not good for you, and there are a number of ways if you smoke to stop smoking. So if you still smoke, I encourage you, for your health and for the peace and sanity of your family. But the thing about this that has me concerned, Reynolds and another company, I forget their name, they have products on the market almost identical to what Juul Labs sells, and they're not being pulled from the shelves. Now, nobody said life would be fair, but to me that seems about as unfair as it can possibly get. To the charts. S&P 500 Emini Futures Daily Chart. The most recent swing high was put in on March 29th at a price of 46.30. We then fell all the way at 36.39 on June 17th. The market has at least temporarily found a bottom. We've moved higher 1, 2, 3, 4, our 5th session now. Then don't forget we consolidated 7 sessions before this most recent drop. What we've come up against is the daily BBC. Now we know the pullback to the BBC holds more often than it doesn't. That's across all markets and all time frames, not just the S&P daily chart. It could be a crude chart, a 1-minute chart. It could be Apple, it could be Google, it could be your favorite crypto, your favorite Forex. The pullback to the BBC holds more often than it doesn't. I mean, it held here for 7 sessions before it finally gave way. So the big question now, we overcame red and falling, potential resistance. We overcame the daily step line, which as you can see became support. And we talk about that all the time. When these indicators get directly below price, they serve as potential support. When they get directly above price, they become potential resistance. So today we have what we call resistance times 2. When price rallies up to a BBC, any market, any time frame, we expect it to find resistance. But there's another layer. These fibs are reverse fibs drawn from the swing high to the swing low. Typical fibs are drawn from the low to the high, but these are reverse fibs. Now, institutional buyers are the ones who move the markets. Okay? Our strategy, our methodology, and our indicators is not designed to beat the market, outsmart the market, outrun the market. None of that. It's simply, everything we do is designed to give us a clear view of what the institutional money is trying to do, and then we simply want to ride the coattails of that institutional money until we reach our goal for the day. Because at the end of the day, the market is always right. No matter what we think, well, it can't go any lower, and then it does. Well, we're not going any higher than this, and then it does. Okay? So we're up against the 24% reverse fib and the daily BBC. If institutional buyers remain committed and push us through this area, then the next obstacle overhead will be the 38% reverse fib and the previous bearish cross. Whenever there's a bearish cross that leads to an extended move, the first time price returns to that area, it will almost always act as good resistance on the first move up. So we had resistance times 2 here, and then we got resistance times 2 here. And then if buyers remain committed, we've got the 50% reverse fib, and we got all this. So this would be resistance times 2-minute count. Then we have a trend line. Then we have the 62% reverse fib. And then we could make a run at that high, which is not the all-time historic high. Okay? So, that's it from the daily chart. The reason I always show you the daily chart at the beginning of the recap is because that's what the institutional money's looking at. They look at daily charts, weekly charts, monthly charts, the way we look at 30-minute charts, 5-minute charts, tick charts, range charts. Now, why do they look at the larger time frames? Because they have deeper pockets. Okay? And we're just off the high of the day. Okay, could this momentum continue? Could this be the day that we slice through the BBC? It could be. It would be unusual, but it can happen. When it comes to trading, you got to embrace all possibilities. Okay, I showed you the ZTA numbers earlier. Gave you a chance to get a screenshot. The S&P CTA long last night was 37.95, and as I explained, the final trade to target on every alert, logic or CTA, is the weekly trading zone overhead. And so that target would be 38.42. The weekly zone is 38.42/38.43. Now the zones are published. This was a holiday week, but typically, going back to about December 14th of 2009, we publish the zones every week for our members. And price has behaved around those weekly trading zones the same. It hasn't changed. Okay? Once you become a passport holder, you'll receive your weekly trading zones every Monday morning at 6:15 a.m. Eastern. Okay? When price drops to a zone, we expect support. When it rises, we expect resistance. In this instance, we pushed right through it because there was lots of bullish momentum trying to get us up to that 24% reverse fib. Now, while institutional traders may not have the benefit of the BBC, they certainly have the benefit of fibs. And so once we hit that fib level, after this rocket ship ride, we just flattened right out. And the step line as you can see, has now crossed over to the right side of blue and climbing. So if we get a close, a red close below the step line, that is an official exit signal, because it's indicating that price is most likely going to attempt a pullback to the BVC. And the pullback to the BVC holds more often than it doesn't. Okay? So be very careful up in this area. You've got blue and climbing directly above price. So even if we start to print green, there's potential resistance right there at 38.96. Now if we overcome that resistance, then there's lots of blue sky overhead. So from 37.95 to 38.42, that would be 46 points at $50 a point. It's over $2,000. $2,300 per contract traded. Now that's just to the target. Okay? Traders who've been with us for a while know how to handle this, and while they may have taken profit here, they also understand how to use Logic 247 and how to re-enter the market and how to continue higher. Okay? And these are all things you'll learn as well, should you choose to become a lifetime passport holder. We caught a trigger, we had a pullback, and another leg, and the market looks ripe for another pullback. Price always reverts to the mean. And in our case, the mean just happens to be green, and we call it the BVC. Pullback hell, pullback hell, pullback hell. Eventually we know the pullback won't hold because we're getting ready to head in the other direction. But the pullback held, and it held. And if we get a pullback here, we will expect this to hold until proven otherwise. On the Dow, pretty similar story, no trigger on the short side. The trigger was 36.40, and the final trade to target was the weekly trading zone overhead at 31,375. So that's, here I'll break down and use my calculator. $31,375 minus 30,640. A 735 points at $5 a point. That's $3,675 per contract traded. That's per contract traded from the published entry, and we didn't quite make it to the published target. Okay? Now the market may try, but keep in mind blue and climbing is directly above price, and so that could be the resistance that prevents it from touching the weekly zone. Or as we go into the close, buyers may get bullish and push this thing higher. Although after this type of a run going into the close, it would not be unusual to see many of the institutional traders take profit because they got a lot. Now the figure I just gave you on this move, $3,675 per contract, keep in mind that institutional traders trade hundreds of contracts at a time. Yeah. So do you want to go home over the weekend and worry about all that open interest you have? Some will, some won't. We'll know when the market closes today. And Sunday night's open should be a real gangbuster. So we covered the S&P and the Dow. Here's the Russell. Russell triggered at 1710. The final trade to target was 1763. But the high we put in was 1759. So that's 49 points. Call it 50 points at $50 a point. It's $2,500 per contract traded. And you'll notice the pullback to the BBC held. And so we opened last night. The vertical line here separates today, Friday, from yesterday, Thursday. We opened last night and consolidated right along the weekly trading zone. Only three things happen at a weekly trading zone. The most likely, 70-75% of the time, is going to be this consolidation. Second most likely is rejection. That's where you have a candle that goes all the way up to the zone, but by the time the 30-minute candle closes, the only thing left touching the zone is wick. That's called rejection. Third and least likely, but it happens, is the slice. And what typically happens with a slice is if we slice through a zone like it's not even there, when that move runs out of steam, price will retrace back to the zone it sliced through and then continue in the direction of the slice. On the NQ, 11,741 was the trigger. Caught a nice move, pull back to the BBC, the pullback held, and we made it all the way to the published target. And so 12,035, 12,035 minus 11,741. It's 294 points at $20 a point is $5,880 per contract traded. One contract from the published entry to the published target is enough to pay for your lifetime passport and even take a little vacation because you got $880 left over. Or you could go out for a super nice dinner. It's your choice. All right, we've covered all the indices. S&P Dow, Russell NQ. Let's go to crude oil. Okay, now we got rejected here. It's about 70 bucks, 90 bucks. We get rejected again here, 40 bucks. We never trigger on the short side. We're really just consolidating here along the weekly trading zone. Remember, that's the most common thing to happen, followed by rejection. Then we make the move, okay, from 105.20 up to 106.78. So that's $1,500 per contract traded. Then we get back below the trigger, but not all triggers are created equal. Now, on this trigger, price is below the BBC. We only go long when price is above the 30-minute BBC. So this would have taken a little bit of patience, and so your entry would not have been right at 105.20 on this one. It would have been a little higher once price. You might have waited for price to take out this high. You might have even waited for price to take out this high, maybe even this high. Okay? It still gives you a nice run from 107.10 up to 108.50. $1,400 per contract traded. The key here is the pullback to the BBC held, and so far the pullback to the BBC has held. We're printing a green candle. However, notice the step line crossed over, and so now The step line is directly above price, so that's potential resistance. If price can move through that resistance, then we got red and falling. That's potential resistance. And then if we can get through that, this little triple top right here, that's potential resistance. And if we can overcome that, then we've got this nice big area up here where price can flow freely right up to the weekly trading zone. On gold. Gold last night was a little weird. Here, price is below the BVC, but you got blue and climbing. And you don't want to short into blue and climbing, because this is what happens. Not much. Okay. You want red and falling. Okay. And even in this case, where we had red and falling, 23 was the trigger. We made it down to 22.5. 22.3, 50 bucks, 70 bucks. And then we finally got a decent move down that took us all the way to the target. The zone is 1819/1820. So that's 3 points, $100 a point, $300 per contract traded. On silver, silver pays $100 for every 2 pennies of movement. Now we got that same situation here. Price had to come way down through blue and climbing. Now some of our more experienced traders would recognize that once this swing low was taken out, that they just might want to take this trigger. It's entirely up to you, but it ran right to the target from 85 to 74. That's 11 pennies, $550 per contract traded. We get back above the trigger, we get rejected on the long side, we come back for another run on the short side. This dip takes us from 20.85 down to 80.22.5. That's 2.5 pennies. 2 pennies is $100. Then we get back above the trigger, we got red and falling, and we get a trigger that takes us down to 28.78, which would be $400 per contract traded. Then we get back above the trigger, and with red and falling, we come all the way down to the target, and then some. See, when this candle closed and this candle opened, we continued to drop. However, when we do the recap, we just count the target. I mean, you can do the math in your head, what was in the move, but from the published entry to the published target, from 85 to 74, that's that 11 pennies, $550 per contract traded. Then we got back above the trigger and did it again. And then we finally get a trigger on the long side. 2013 runs up to 2014 and 21.14 and a half. So that's a penny and a half. Takes 2 pennies to make $100. Then we get back below the trigger, trigger again, and run up to 21.20. That's 7 pennies, or $350 per contract traded. And then we dip below and we get another little 2 penny move, it looks like. 21.13. It was actually a 3 penny move. $150 per contract trade. On the euro, we triggered. Now let me explain. Over here you'll see a price of 1.06600. If price drops to 1.06500, that's $125 per contract traded. If it drops to 400, then that becomes $250 per contract traded. So we had a small move here down to 760. And then we get back above the trigger, and we have an even smaller move. Just a couple of very small moves on the short side. On the long side, this first trigger really took us nowhere. And then from 59.95, we made it up to 6,100. So there's that $100 per contract traded, 125. Then we get back below the trigger. We hit the target, get back below the trigger, and we hit the target and then some. And we haven't dipped back below the long trigger again. And the final market, bonds, 30-year bonds, ZBU, 22. The long trigger was 137.07. Made it up to 137.16. Not a bad move. The short side was 136.19. This first move only took us down to 136.15. And then we triggered, and we triggered, and we triggered, and we triggered. And now this move had blue and climbing, so this might be a trade you choose not to take because that blue represents potential support. If you took it, there was a nice payoff. Price dropped all the way to 135.26. But what you want to look for, and what we teach you to look for, because there's so many opportunities every day across all the different markets. Not just the futures markets, but stocks, crypto, forex. We teach you to look for only the highest probability, lowest risk trade opportunities. If you learn to do that, it can save you a lot of grief, a lot of time, and a lot of treasure. One last look at the daily chart. Still pushing up against that resistance. The little candle that could. It could break through and it could break down. We'll know at the close. To become a CFRN passport holder, all you have to do is go to this web address, eminifuturestrading.com. The page is pretty self-explanatory. But if you need help, reach out, call Valerie at 949-42-EMINI, or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have a teacher. Imagine trying to become a plumber, an electrician, a brain surgeon, an airline pilot, even a barista. Not knocking baristas in any way. Without somebody to teach you how to do the job. But yet that's exactly what 9 out of 10 traders do. They go, well, I bought this indicator, okay, but I bought this video series, okay. I got a shelf full of books, okay. What's missing from the equation? A living, breathing teacher. Putting on, taking off trades live in real time in live markets, explaining every move they make, every trade they take, and the rule behind it. That's the difference. So not only as a passport holder, which by the way never expires, it's good for life, no recurring fees, no upsells, no gotchas, none of the garbage that you're way too familiar with, okay? Not only do you have a live teacher 2 hours a day, every trading day, but you have access to unlimited one-on-one mentoring. Now, you might have a cell phone plan that says unlimited, but in most cases, there's a bandwidth cap, okay? Well, yeah, it's unlimited up to in the little tiny fine print. It's up limited to, this point, and then we have to throttle, slow your data down. For us, unlimited really means unlimited. When you need help outside of the live training room, outside of the workshops, see, you get 10 hours with a live instructor every week. And then there's 2 hours on Thursday nights with the members workshop. And then there's the afternoon session where you can ask questions as well. And if you still don't get what you need, if you're still having issues, you just book a mentoring session. Me, with Michael, with Valerie, with Bert, whatever area you need help in. And we actually show up. Now, the methodology and strategy we teach you and the indicators we provide you, that's yours for life. And not only does the strategy and indicators work beautifully with futures, but also stocks, also crypto, also Forex. How's that possible? I'll tell you. It's possible because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. And what our strategy and our indicators and our weekly zones help you see is where that next potential support is, where that next potential resistance is. People that tell you they can help you read tomorrow's headlines today, unfortunately, they're fibbing. Okay, let's call it what it is. They're lying to you. Because that's not how God created this world. Adam was never given the ability to change the past or know the future. And those two things are inextricably linked for eternity. So, if you can't know the future with certainty, what's the next best thing? When it comes to trading, it's knowing what the next high probability move is. And that's what we provide. As a passport holder, you also receive the Logic 247 alerts, the concierge trade alerts. You have access to the members only workshop. It really is everything a trader needs, all under one roof at one low price. EminiFuturesTrading.com. Now remember, we'll open for business Sunday night, 6 p.m. Eastern. That's when the CTAs will come out. That's when the logic alerts will start coming out. And once they start coming out Sunday night, they'll continue to come out around the clock till next Friday afternoon at 5 p.m. Eastern. So we're going to wrap up this broadcast with our good word for the day. Now this is part 4 of when you die. That's something we're all going to face. So we might as well face up to it and be ready for it. Psalm 17:15 says, "As for me, justified, I will behold your face when I awake. Your presence will satisfy me." There has never been a race of mankind that didn't believe in some kind of future life. Whether it's reuniting with ancestors, as some Native Americans believe, or the sensual abode of bliss of the Muslim. How do you explain that? Long before any evidence for this worldwide belief had been gathered, Cicero said, "In everything the consent of all nations is to be accounted the law of nature. And to resist is to resist the voice of God. On the night Socrates died, Crito asked him, "In what way would you have us bury you?" Socrates replied, "In any way that you like. Only you must get hold of me and take care that I do not walk away from you." In his Phaedo, Plato presented powerful arguments in favor of immortality. Others argued for it too. Great thinkers like Thomas Carlyle, Thomas Jefferson, and the German poet Heinrich Heine. Alfred Lord Tennyson's most famous poem goes like this: "For though from out our bourne of time and place the flood may bear me far, I hope to see my pilot face to face when I have crossed the bar." And Byron writes, "I feel my immortality o'ersweep all pains, all tears, all fears, and peal, like the eternal thunders of the deep, into my ears this truth: Thou livest forever." All these great minds shared the conviction of the psalmist. "I will behold your face when I awake. Your presence will satisfy me. When you think about it, good night here just means good morning over there." And that's our good word for the day. I hope you all have a great weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.